Okay, welcome everybody. Welcome to PropCast, our weekly delve into the trading markets, the PropCast firms, and the educators, of course, who train everybody how to trade. My name is Simon Campbell from Investing Expos. We're the company behind the London Prop Trading Expo, which takes place in May 2025. I'm joined by my colleague Tony Williamson from the Prop Traders Club, who's also involved in the expo. We're delighted to have our guest with us today, Alex Spiroglou. Is a prospective trader, retail trader, and professional trading educator himself. Tremendous following, spoken at many of my events over the years. And I think if you check him out on LinkedIn or any of the channels, you'll see Alex's tremendous reputation that he has. Welcome, Alex. Thank you for joining us.
Thank you for the invitation, Simon and Tony, of course. It's a pleasure to be here and both to do the podcast and also to get to see my friend Simon, which we've known each other for many years.
Fantastic. Just let's just start at the beginning, Alex. Can you give us in just a few sentences how you became a full-time trader? What led you to make trading your full-time pursuit?
But to tell you the short story of it is that I never thought about doing anything else because the idea was implanted in me by at the age of I think memory serves around 15 from my father. He used to the short stories. He used to work for Bank of America. He went to the UK for some training. He saw a dealing room. He came back and he said, "Son, I think it's best for you to become a trader." And as a
Good
child,
advice.
yeah, I mean, as a child who actually wanted to impress their father, I said yes, although I didn't know what a trader was. Basically, so I got caught up in finance. I mean, I did a bachelor's degree in City University. Then I decided I really wanted to do this. So that's how I started. So ever since my first employment, that was in October 1998, this is all I've done in various capacities. Both started as a stock trader, then became a futures trader for a couple of hedge funds as well. Worked a couple of hedge funds as well. So that's all I've done all my life so far. And I guess when people ask me if would you like to change, I said no because A, I like it, and B, I'm too stupid to do anything else.
But why not? What better reason? Trading styles. How would you describe your trading styles? I mean, most traders experiment with different analysis and different time frames, even different products. Well, when they find what works for them, I find that most people say that they tend to just stick with what works for them rather than trying to trade lots of different markets and lots of different strategies. Is that your experience?
No, my experience is a bit different again, but what I say goes for me. I mean, I show a way, not the way. Um, Semi-systematic, which means part of my I try to combine both worlds of systematic and discretionary trading because I think each approach has its own merits. Of course, I would encourage people to find their own way. I know a lot of systematic traders who try to be discretionary, didn't make it, but they found success the other way around. But in general, I would advise people to start as a bit systematic, rules based, so they can get a feel for how things, and then gradually become a bit more discretionary. So to come back to your question, yeah, I'm a semi-systematic, which means if a trade is broken down in four parts: the setup, I mean, why you want to be long or short; the signal, where you get in; the stop, where you get out; and the size. This is my 4S framework. The setup is discretionary, rules based, but still discretionary. The size as well, but signals and stops are fully systematic.
Fantastic. Alex, I've introduced you, obviously, Alex Spiroglou. Where do people find your, do you have a web page or how do people find it? Just because a lot of these times when I watch these podcasts, I want to go on and sort of pull the website up of the speaker that's on. So, like to, where would people go to find out about your website or?
My website is under construction. It should be up and running in February.
Okay.
So, but the URL is www.alex, first name, Spiroglou, second name, .com. In the meantime, they can email me at alex@alexspiroglou.com, or they can find me on LinkedIn.
LinkedIn is where we obviously.
Yep. And
convert
the website
quite a
should
lot.
be up and running. I don't know how soon the podcast will be published, but in February, the website should be up and running.
Fantastic. Well, we get these things out quite quickly, actually, quite immediately. Fantastic. Tony, do you come from a prop trading background? You're also a self-taught trader yourself. From the prop world. Do you, or did you start using any kind of systems that Alex is describing? Any of this familiar to you, or?
Yeah. I really like the idea of a semi-systematic. I'm more discretionary in my style, but I like that sort of idea that it can be a bit of both. So I might try and implement a bit of that in my own trading, actually.
How do you think, Alex, given the fact that most prop firms have rules and regulations about how to pass the challenges, and you can't trade over news events and so forth, does the systematic trading work? Is it more aligned to these prop trading constraints that there are? Do you think it works better for a prop trader?
Well, it depends on the types of rules, the limitations. I would pick, well, I've worked in a proprietary trading space, but that was a long time ago. I think it was 2007, 2009. But it was for futures. The firm was called Futex. We had a large trading floor. We had about, I think at its peak, we had about 100 traders. It was a physical office. And of course, we did have limitations as well. I was actually very good friends in working with Navinder Saral, the flash crash gentleman.
Right, yes.
Yeah, yeah, so I think it would depend on the limitations. Since then, a lot of shops have popped up. I haven't kept up with the industry in the at that time it was just futures. There wasn't like any forex. So to come back to your question, I think it would depend on the limitations. I would choose the prop firm based on the limitations offered. So for example, if someone is an intraday trader, then would make for them to choose a prop firm which is focused on not taking overnight risk. So they would align themselves with the company. But there are other companies who offer, they let you carry positions overnight or over weekends. They're a bit more flexible with the risk management. So again, it depends on aligning your own style with the risk mandate of each company.
That's an interesting point. Tony, is that something that you pick up on at all at the Prop Traders Club? Are there any way to sort prop firms out in relative to the sort of trading style that the trader might have? Like Alex is saying, a day trader, an intraday trader, or maybe a longer term sort of position trader?
Yeah, absolutely. That's been one of my goals. I've been trying to build an app. I've half built it, but basically you can filter down all these different prop firms based on what rules they have, if they allow news trading, if they allow holding overnight, over the weekend. But yeah, there's basically a prop firm out there for every sort of trading style you can think of. A lot of the new ones, the future ones, they focus a lot on consistency. So they want to see you making consistent profits before you can receive a payout. I think that's something we'll see a lot more of coming into 2025 as well.
Yeah, I think it's very, very important because both my last positions, where I mentioned that I was working at Futex and also then at the later hedge fund, we also had a prop trading desk, so where we used to train and also filter traders. So during this procedure, while I was training the traders there in the company, we had very strict criteria, but the difference, I think, that made the difference wasn't so much the criteria themselves, but it was actually mentoring. I think this is the most important thing. Yes, of course, there has to be some kind of a discipline. There has to be some kind of rules that differentiate people that do get funded with others. But I think the support and the mentoring is the most important, thing that holds everything together.
Yeah, I think it's quite hard for new traders as well, because they're coming in from social media like X and places like that, and there's everyone selling courses, and it's kind of hard for them to distinguish who's legitimate and who's not.
So the hand holding is I think is the most important aspect of it. This is what makes or breaks the traders.
What do you think? I mean, I read competing posts on LinkedIn and social media every day about prop trading. I find it fascinating, this argument, that the debate that goes on at the moment. Some people are a bit more skeptical, and other people say, look, this is the best opportunity for retail traders for quite a long time, because, as we know, one of the biggest hurdles towards becoming a trader is being able to have and risk your own personal funds to open up an account and fund it to the level that you need to ensure that you're not going to have to take huge risks to get a decent return back. But prop trading effectively offers that ability for you to leverage up the size of your account. Do you think that's that's a good thing? I mean, going forward, is this something that's going to take over the industry?
Are you asking me or Tony?
Alex, first of all, sorry.
Right. Okay, sorry. Well, let's say prop trading firms, they have been more popularized in the last years, but they have been around for decades. It's just that they were running a bit more underground. Even at the elementary basis, if it was futures traders at the floors who were working as market makers and they were getting backed by various firms. I'll just mention some names like SLK or David Kite.
Yeah.
These were all firms that go back like decades ago. What we are seeing right now is the popularization of a concept that has been around for literally decades. I think it's both good and bad. It is good because it's become more widely available, and and also not strictly in office, but also online. So I think that's good. What I don't like about it, is that some firms are strictly online, so there is no physical aspect in terms of the training or the camaraderie of being in an office. And another thing that I don't like is that some firms are just, to put it bluntly, just renting demo accounts. They're not truly in the business of funding traders or taking on risk or managing risk. They just play the statistics of people failing often, so we'll just pick up the fees. But as a general, I would say that I'm quite positive on the industry itself. Yes, there are a lot of companies that have mushroomed up, and I would see probably a lot of consolidation going forward. Some will come a lot stronger, a lot better, and if it gets regulated or self-regulated, I'm very positive about it, and I think it's a good thing. It presents an opportunity for traders to not risk their own funds, and if it becomes in a more professional way, it's going to be a great opportunity for people wishing to come into this industry.
Yeah, I mean, just picking up on that point of funded accounts, Tony. People probably don't understand, if you're new to prop trading, that you can purchase an account for a month or 2 months and effectively trade with the firm's money, and then you split any profit that's made. Is that's a sort of fair assessment? But
yeah, that's how it works. Alex made a lot of good points there. There's been a lot of development in the technology for these prop firms to operate. There's a lot new white label options. Basically, anyone with a few $1,000s can set up their own prop firm. And
yeah,
I think that's becoming a bit of a problem. Like Alex says, I think we're going to see in kind of the good ones like separate themselves from the rest. Basically, I think we're going to see maybe like 10, 15 in the online space are really going to stand out best.
Yeah, I think the industry eventually will mature into something a bit more professional. So we're in the midst of this. Obviously, some companies may have first mover advantage, but there is room for the people who become more professional will survive.
Yeah, exactly.
Tony, what you manage quite a large community on Facebook and through the website, on Twitter, X rather. What would you say is the comment that you see coming up more often than anything else? What's the biggest complaint that people would have? What do you see?
So the biggest thing just now is there's a lot of firms that are adapting the risk management controls. So that someone will sign up for an account, then the firm will restrict the rules, restrict them further. So instead of having a 5% drawdown, they have a 2% drawdown. So they'll have their profit share, things like that. There's a lot of that. Lots of payout denials as well. So when it's not regulated, a prop firm can basically just say, we don't like the way you trade, so you're not getting your profit split.
So is there a risk of being too good then?
Yeah, exactly. Because I mean, all these firms are basically b-booking, like Alex says on demo accounts. So the trader profits, the firm loses. It's just a standard b-book model. So yeah, more profitable traders are harming the prop firm.
They can't afford to have more traders winning than losing, I guess, because they use some of the funds that they take from the traders to pay the winners, from the losers to the winners. Is that right?
Yeah, pretty much. It's a almost quasi Ponzi scheme.
Yeah, I think Tony is probably a bit more honest than I was. I didn't want to put it that bluntly, but it is like this.
But
The original prop trading firms were actually did make money from the traders' books, and the difference was back in the day they didn't charge for training, or they didn't charge, so there was no conflict of interest there. Because when you start charging for something, there is a bit of a conflict of interest in terms of like picking up that, focusing on the subscription fees rather than the book itself. But they were very, very selective in the interview process. For example, when, like I mentioned, 2007, so for me that was like almost 20 years ago. I had to go through a very rigorous interview process, and then later on, when I became the trainer myself, again we had psychometric tests, we had tests that for maths, for speed, all sorts of questions. So, but we didn't charge anything for it. We just hope that they would come in, show the character, we would put in the training, and then they would become profitable and take from the books. There was, of course, a desk fee, but that was to charge for the services like the squawk, the office, like this sort of. It was actually a time to recoup actual costs for the companies.
yeah, I mean, things haven't changed that much. Everybody has to make something. This is the thing, when money changes hands, when there's a transaction, unless it's the sort of blockchain that we're led to believe everything's frictionless, money has to change hands, commissions have to be paid, and so forth. I mean, I think everybody's aware of that.
Of course.
Yeah,
as I don't have no issue, of course, with people charging for services, but there has to be a service on a service provider.
I mean, just on that, to change the direction a little bit, you referenced education. You referenced that you taught yourself. You've had mentors as well, and I know that you mentor other traders now. So you must see the biggest problems that they have in overcoming. Is this prop traders or I guess there's people that are trading CFDs and futures and options and things as well, or?
In terms of what the challenges they have.
Just the benefits of the education and mentorship.
Well, the benefits is that you don't get they don't get lost in the information. Back in the day when I started, there wasn't information.
Yeah.
A lot of help. So you just to go to the library, or you had to be taught by someone more experienced, which these were the two methods I learned. But now we have so much information that we're actually drowning in it. I mean, you can like AI actually has made it probably even worse for people.
Yeah.
Yeah. So I think that what people lack is not so much information as it was back in the day in my time, but they lack implementation. They
Okay.
need someone to sit over their shoulder and show them, because this trading is very pragmatic, very, very practical. It's not a theoretical, you're not being taught philosophy or history. And page 38 of the Market Wizards book will not tell you what you did wrong. So I think this is the main point. As long as people don't come with a mentality that a course is a magic pill. So this is what I differentiate myself. I offer the courses for free. So there's no incentive for, what they know there's transparency. And I don't charge for information, I charge for implementation. So people can come, see, the information that we'll be getting. And if they're interested, they can come work with me.
Interesting. Can you tell me a little bit more about that? How does that work then? You work with the traders in terms of investing and trading the same accounts, or
Well, again, that's another good question. Well, basically, I give them the courses are for free. I've done it on a low scale right now. And as I mentioned, in February, the website will be ready. I will be launching it more publicly. So the courses will be free, will be completely transparent. So people can watch them at their own time. And if they want to implement it, they can come and they will sit in the formal community, because I think that's another aspect of the education model which is wrong. Is that a course as it is right now, which is like email support, and then we meet like once a month, they need someone on a daily basis. And they also need peer review. So I think a community works best. Now, what I will be doing from existing communities is that I will be scaling the numbers very low, because we have all been part of communities where they had like 2,000 members, and there's a lot of noise. So the community has to be very small, so very professional. And that's why the community is not on a monthly basis, it's on an annual basis, annual subscription, because I wanted to align that with the intended goal, because it will realistically take 1 year. It can't be doubling. You can come in, for 1 month and leave the next.
That's an interesting point. I was going to ask you, how long does it typically take? So someone with no experience, they want to start earning let's say a side income from trading. How long does it take before you would think they'd be competent? Anybody can have a few wins and a bit of luck,
Of course.
but in terms of being a trader, I guess you need to be consistent, and you need to be seeing a 15 to 20% return. Is that something that's achievable for most traders within a few months?
I hope 15 by 20%. I think you mean per annum, not per month.
Per annum.
No, that would be
Because I've had a lot of discussions about this. I mean, about 15% per annum, and I said, yeah, look, guys, I'm not your guy if you're looking for that. I mean, I can't even do it myself.
550 or 15.
1.5.
Yes. 50% is much more realistic. But of course, you see all these people now on Tony. You must see a lot of this on the group. People coming in trying to brag about how much they can do, and they're driving Ferraris and things like that. But I did see a post yesterday which said, don't ignore too much all these what they call finfluencers nowadays, because they do actually still give the trader a view of the trend, and they can highlight some new markets and things like that. So it's not to be completely dismiss them, although generally it is quite good advice to dismiss information that you get from influencers on TikTok and so forth, but not altogether. But reasonable returns you should be aiming for 15 to 20%.
You can, I think, look, realistically speaking, you can go for more than that as long as you're willing to accept the risk. So
Yeah.
as a rule of thumb, I use the 1.5 times your risk budget. So if someone asks me, okay, how much money can I make? The first question is, how much are you willing to lose? Multiply that by 1.5 times. So then you get what's the maximum potential. It's not guaranteed. So if someone tells me I'm willing to lose 20%, I would say, okay, you can do about 20 to 30, best case scenario, because you have a risk budget constraint. So I think the first question is how much are you willing to risk? And I think at 20% is the maximum one should risk, because after that point, you are at the control, but you're not in control. Both the financial and the emotional aspect of the drawdown is too much, because after a 20%, you already need a 33% next year just to catch up. So if you put yourself a 15% drawdown, then obviously you have about 15 to 20% maximum upside. So I think this is work for us, and
it's an interesting area. Tony, I don't know if you've got a comment on this, but there's a certain level with prop, whereas you're talking about the risk side, Alex. With prop, the risk is arguably it's not there, because they're not really have the customer's funds. Absolutely. On the line. So does it encourage you to be more like a gamer, the gamification of trading, take higher risks, and just maybe there's a different psychology that comes out of prop trading than does in the real markets?
Yeah, I think that probably does harm a lot of traders, like myself included. When I first found prop firms, I did struggle to kind of connect it with real money, because you see $100,000 on the screen.
Yeah.
I've never traded more than a couple of thousand. So you don't really connect that with real money. So you kind of need to battle yourself to appreciate that that's profit that you make. You get a profit share off it.
Yeah.
Something I struggle with myself. Yeah.
The point that Tony made was quite correct, but there are ways around it. I mean, again, back in the day when I was training traders for the fund we were working for, because we had a department was asset management for institutionals, also tried to create traders in-house talent. So what we did in order to actually, they did a lot of things, but one of the things we did to bypass that risk of people not taking serious, we said we gave them the performance criteria, but we also told them we are not going to tell you when we take you live. So when they were actually trading, they didn't know if that trade they were taking was on a demo on the live account. So they're always taking it seriously, because the loss they may having, it was actually show up in their P&L without them knowing. So they had to take it seriously.
I suppose that kind of really helps with having someone watching over you, saying, we're watching you basically, and it's your job on the line.
Exactly. And especially for them, it was because they didn't know. I mean, it wasn't like demo money. There was the uncertainty of, okay, is this demo money we're losing now? Is it live money and our P&L will be in the red?
Yeah, I like that. Yeah.
I think we might all be able to remember being wee boys, and your dad pushing you along on your bike, and all of a sudden you're cycling, and then you turn around and see that he's let go of the saddle, and then you fall off. But you've actually been cycling on your own.
Absolutely. And this again goes back to what we mentioned previously about the importance of support. Yes, funds, the availability of funds is a good thing, but it doesn't replace the need for support, ideally on a physical office, but even if not, even through a virtual trading floor, a virtual community. Again, the emotional aspects, being alone and unguided, I think that's a big issue. And I think that's the one thing that professional prop firms will have to address, unless their sole business model relies only on picking up, the subscription for those that don't make it.
Yeah, I mean, I don't imagine most firms will survive that long, just on subscriptions, but you never know. I mean, that's been interesting. Sorry.
Yeah, firms are looking to monetize the data as well. feel like it's a bit harder than them earlier in the discussion. But yeah, there's a lot of firms that are doing good efforts to see their traders succeed. So they'll aid both the profitable traders and they'll monetize the data as a whole. So that's another thing I think we'll see going in the industry.
And, sorry, just in terms of monetizing the data, what does that mean?
So as I've not heard too much about it just now. I heard something about the finance magnets when I attended last year. So they've been trying to do it for years, especially the big ones like FTMO, where they've got all this trading data, which is on demo accounts, and they're looking for a way to somehow monetize it. So not sure how that's going to happen.
I suppose anything that gives an insight into how the mass of the trends of traders, that's probably valuable for understanding what's going on.
Actually, there is a firm that I'm aware of that does this in this space. I don't know, of course, I should be mentioning names. So I don't want to be sounding like I'm promoting them or anything.
We'd be like the BBC. We can say there are other prop firms are available.
Yeah. So yeah, and I know at least one firm who does this. I mean, they're genuinely fun traders. I mean, based on that, they don't have any limitations to the downside. Because they have them on demo. So once they become profitable, then they fund them. So I think it's one of the few ones I've seen that are really, really honest about through the business model.
Which firm is that? You can name them.
Darwinex.
Darwinex.
Yeah, cool.
I know them. I know it based in Madrid, Juan and Nacho. Yeah, fantastic.
Yeah. They've approached me a couple of times to they also have London offices to perhaps we can do something together. I've looked at the business model from the ones I've seen. They look quite. They also have a thing called. Again, I don't have anything to gain for this. I'm just through the discussion. They have I think it's called Darwinex Zero. Basically, a very very low subscriptions, like $36 per month, something like that. It's like even nominal. But you do get funded, and they just see your performance and they adjust, like Tony mentioned, the payouts. So in any case, I'm saying they're legit guys. I mean, I'm sure there are others as well. I'm just mentioning.
Well, the Darwinex have been around for years. I know them myself. I know that they've had great platforms to be able to even sort of trade with traders. That if you were on the Darwinex platform, you could become a trader. You could put money with it. There's just a lot of good technical stuff that goes on there. So it's no doubt that they're moving into the funded prop trading space as well.
As far as I'm concerned, they're legit. I mean, the ones I would have no problem recommending.
Yeah, very good. Well, guys, I think that's been great. We've exceeded our 20 minutes, but it's been a fascinating discussion. I mean, if I might just recap some of the things that we've talked about, which were interesting to me, were, I mean, Alex, overall you've got some differing opinions on the prop space, even though you've been involved in prop trading for many years, and overall you're positive on it as an outlook for
absolutely
the way forward. Tony, you think that some of the prop firms have got a little bit of evolution still to go, and we might see some of the smaller firms dropping out and seeing the bigger, stronger firms almost moving in and taking on a sort of self-regulatory code in order to give people comfort that they're dealing with the right people.
Yeah, agree with that.
Yeah, and education is obviously a key. It's interesting to hear about the what was it, Alex? You were talking about the it's gone.
The training and the support that needed for
exactly.
Yeah, a good brokerage account or a prop term. They're a tool, a useful part of the equation, but it won't replace driving skills. It's like having a car. You may be given one, but unless you know how to drive it, I mean, it's no use. It won't drive itself.
Absolutely. Well, guys, it's been a great discussion. We're going to wind it up there. We could go on longer, of course, as always with these recordings. Tony Williamson from the Prop Traders Club, thank you for joining us, and of course Alex Spiroglou, a real pleasure to have you on board with us. We hope to see you at the shows in London that we've got coming up this year. Perhaps we do a webinar or something as well. But in the meantime, I really appreciate you sharing your thoughts on trading and prop as we go forward. So thank you so much for your time.
Thank you both. It was a lovely discussion to see an old friend Simon, of course, meet Tony as well. And I wish you the best for your fine shows that you do. And thank you so much for this opportunity.
Thank you, guys. Take care.